It's time for your Low Country real estate market update. It's the Brian Beatty Real Estate Show. Brian is one of the top 1% real estate agents in Charleston. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. Now, broadcasting from the WTMA studios, here's your host, Brian Beatty.
Good morning, Charleston. This is the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA. Thanks for joining me this morning. We're going to take some calls this morning. So I want to give you the phone number here in the studio, 843-556-1250. 843-556-1250. That's the number here. And we're going to talk about a lot of stuff this morning. We're going to talk first with Bill Sandvig of Movement Mortgage, who has joined me. We're going to talk about a new product that came out that really targets real estate investors, but that also can cause some concern, and I want to talk about that. So we're going to talk about that first, a little bit later on in the program. We're going to talk about short sales, foreclosures, buying them, selling them, what that means for you. We're going to tie that into kind of this whole real estate investment spin that I'm going to put on this show. We're going to talk a lot about that this hour. So again, if you have any questions, feel free to call in, 843-556-1250. If you'd like to reach me personally, if there's something I can do to help you with real estate here in the Charleston area, give me a call. My number is 843-345-1273. Or you can go to my website, listingsincharleston.com. And on that site, you can take a look at everything I have for sale, everything I have sold. Search any property for sale by any real estate agent or any company in our MLS. And if you're thinking about selling your house, click on the Sell Your Home tab. You can learn more about my 59-day home sale guarantee at 4.5% commission. Basically, I'll sell your home in less than 2 months, or I'll sell it for half my commission. Not a bad deal. Again, the website, listingsincharleston.com for that. Bill, good morning.
Good morning, Brian.
So tell me a little bit about this new program that's come out that really kind of is a big benefit to real estate investors.
Certainly. So as we're talking through this, I don't know many people who don't like to talk about investing in real estate. So please join us with your questions as we get into some of the nitty-gritty on some really exciting news for real estate investing. So in the past, one of the biggest concerns that realtors or people have had when they're going to buy a new house is, do I have to sell my house before I can purchase my next one? Or how can I possibly leverage the house that I own into a investment property? And in the past, there's been a hard rule that if you don't have 2 years of rental experience, then it doesn't matter if you're buying an investment property, you have to qualify for that full mortgage payment against your debt to income ratio, unless you have 2 years of documentable rental experience. You can't do it. So it's a hard thing for people to break into that investment world. A lot of times people would have to just come up with cash. They start small. I have to wait until I get a raise. Well, that old rule, the 2-year wait rule, if you will, has gone as of a couple of months ago. We now have a product that will allow for us to completely have the potential rental on the investment property cancel out the mortgage or liability on that property. So what that means is, if you could qualify for a house right now with your particular debt to income ratio, buying an investment property would have no negative impact on your ability to qualify for a mortgage. Now, of course, the ratios have to be in line. The rent that you're receiving has to be higher than the liability that you're going to carry.
Okay.
But if that's the case, then you're going to have no negative impact, and there's no wait. So there's a couple of different ways that this can really, really make a difference for people that are looking to initially tap into the real estate investment market, or to quickly expand their exposure or their investment in the real estate market. The first one is, you own a house and you want to get you want to own a rental. It's part of your retirement plan. You want to have a couple rental properties, and you're just having a hard time breaking into it. Well, maybe you don't have any money to put down. Maybe you don't have savings, a nest egg that you can just put down 20 or 30%, like some investment property mortgages require. Well, if you're willing to, you could put your house for rent, go buy a new primary residence, which there's a lot of programs out there for a new primary residence that don't require you to put down a significant amount of money. And if the rent that you would get on your current house, you can use that from day one to completely cancel out that liability. All of a sudden, you now have an investment property. You didn't have to take a lot of money out of savings. So, I mean, that's a great vehicle for people that are looking to build a retirement plan. I mean, it's something that 2.5 months ago you couldn't do.
Gotcha. We're talking with Bill Sandvig of Movement Mortgage. Number here, 843-556-1250 if you have questions for him. So let me kind of summarize very quickly what Bill just said. If you want to buy an investment property, rather than saving up an additional down payment, all you would have to do is rent your current house, go buy a new primary residence, and as long as the rent covers the mortgage on your existing property, that's not going to count against you when you go to purchase your new property. Is that correct?
That's correct. I have had client after client after client come to me and say that they're waiting until they can afford to carry two mortgages. Or another thing that this alleviates is the scenario where, well, I have to sell this house and then I have to move into a halfway house or a extended stay and then close on my next house. That alleviates this. If you're willing to have a rental property, you can transition from your current house right to the new one, and you'd be able to qualify. So that's a first, I think, real direct situation with this impacts. The next one is the true real estate investor, the person that's out there trying to acquire properties. Well, 2.5 months ago, you couldn't get more than 4 residential mortgages to one person.
Okay.
We allow for 10 now. So you can have up to 10 investment properties on one person. You might be the type of investor that is going to pay cash. I've got cash in my wallet. Brian, find me a property for less than $150,000. Make sure my return on investment is where I want it to be. I want it to be here. And once you find me that property, I trust you, and I'm going to pay cash for it. Mm-hmm. Well, a lot of times the reason why they're paying cash is because they don't want to go through the mortgage process, or they know that they wouldn't qualify carrying all this additional debt. That no longer is the case, because when you have a proper return on investment and the margins are right, you could take that exact same $150,000 cash, divide it into 30% down or 25% down on 4 different properties, and each property would have no impact on your ability to qualify.
Interesting. So again, we're talking with Bill Sandvig of Movement Mortgage. Number here, 843-556-1250 if you have questions for him or I. But let me tell you kind of what this makes me think of. It makes me think of back in the heyday of real estate investment. People were buying properties that they really couldn't afford. It was a little different because they were using stated income, stated asset loans. They didn't have to really document where their income was coming from. And they were purchasing property that, frankly, they couldn't afford. They were just banking on the appreciation that the market was seeing. Does that cause a little bit of a concern for you? Not necessarily asking you this question as a lender, but just as somebody that practices real estate on a day-to-day basis. Do you think that there are people out there that are going to see this program? They're going to say, wow, I can go and I can buy a bunch of properties and really not have to worry about the down payment, because as long as they rent for the cost of the property, I can go and I can buy more. What I see happening is obviously people getting into situations where they now own 3, 4, 5, 6, 10 rental properties, and they've taken advantage of this program, which I think is a valid program. But you have to ask yourself the question, what happens if all of those properties lose a tenant? You've got to be able to float 10 houses. It's
definitely quick exposure, and it's definitely a slide to more exposure than we've been in for the last couple of years. There is a concern there, because when I learned about the rule, I started turning the numbers, and I thought, well, I could probably put 6 rental properties on my book real quick. And there are some key differences to where we were 6 years ago. You're going to have to definitely have equity in the houses. The rules for getting an investment property have not changed. You're still going to be required to put 20% down. 7-8 years ago, stated income, stated asset, 100% lines of equity or 100% mortgages. I've heard stories of people buying an investment property for cash, taking out a 100% equity line or 110% equity line, going and buying the next house. They close, 110% equity line. The exact same $100,000 would be used to buy 10, 11, 12 properties for quote unquote cash.
Right.
And so with a stated income, stated asset situation, we're not there. You have to be able to qualify for the mortgage. You still have to have debt ratios that are in line. But the thing here is that investment property is not going to impact your debt ratio. So if you're responsible, if you have a solid credit, decent credit, you have the ability to put 20% down on an investment property, you can do this and repeat this. So, and there is definitely a exposure there, and but there's also a lot of plus.
Absolutely.
I mean, if I'm an investor and in an increasing real estate market, the question comes across: I have this money to invest. Why not have, with the exact same financial outlay, increasing equity in 4 properties with 25% down on each one, rather than 1 property?
Exactly.
If it's a repeatable, successful equation for income, then you can do it faster. That's what this allows for.
Gotcha.
It allows for you to do it faster.
Well, we're going to take a quick break. We're going to talk about this subject more. We're going to talk about where do we find investment properties these days? Do we look at short sales? Do we look at foreclosures? Where can we find the good deals? And we're going to take your questions too. The number here again, 843-556-1250. This is the Brian Beatty Real Estate Show on the Big Talker 1250 WTMA. We'll be right back.
More stimulating talk on real estate matters with Brian Beatty next on 1250 WTMA. Now, here's more of the Brian Beatty Real Estate Show on the Big Talker 1250 WTMA.
Welcome back to the Brian Beatty Real Estate Show, and thanks for joining me this morning. We are taking your calls this morning. Feel free to give us a call here in the studio, 843-556-1250. That's the number here. If you'd like to reach me personally, if there's something I can help you with real estate related, feel free to give me a call. My cell phone is 843-345-1273. Or feel free to go to my website, listingsincharleston.com. You can take a look at everything that's actively for sale in our MLS by all real estate agents, all real estate companies. You can take a look at what I have sold personally. You can learn more about what I do to market my properties for sale by clicking on the Sell Your Home tab. You can also learn a little bit more about my 59-day home sale guarantee. Essentially, I will sell your home in less than 2 months, or I'll sell it for half my commission. So listingsincharleston.com is the website for that. And the number in the studio here, 843-556-1250. All right, Bill, let me just summarize what we talked about in the first segment, because we got into a lot of the details of it, and I want to try and boil things down for people so that it makes sense to them. So let's say that I'm an investor and I have $100,000 cash and I want to go buy a real estate property for $100,000. The way this new rule works is that rather than taking $100,000 and putting it into one property, I could take that $100,000 and divide it by 4 and go buy 4 properties with $25,000 down, as long as it's, at least 20% down payment on that purchase. And as long as those properties are rented and the rental income covers the mortgage, then that is not going to count against my debt to income ratio.
Yes, with one exception there. The property doesn't have to be rented yet. So just based on the projected rent on the appraisal, that number can be used as it to offset the mortgage. So you don't have to have a tenant in that property when you buy it. You don't even have to have an executed lease. We're just going to go based off of the projected rent, which you're going to use when you're making a calculation on, is this a viable investment? So you don't even have to have a renter in there yet.
Really? Wow. Mm-hmm. Well, it obviously makes you think of all the different ways you can skin this cat and buy investment properties. And it's something that I've talked a lot about on this program. It's something that I do personally. It's something I've helped a lot of people do in the past and still help them do. And so it begs the question, is now a good time to buy investment properties? Well, I certainly think it is. And what I always like to distinguish between investors is what the strategy is. Is it a short-term or is it a long-term strategy? And obviously what I mean by that is, are we buying and flipping, or are we buying and holding and renting? Obviously what we just talked about, this new program, really caters to the people that want to buy it and use them as rental properties. It's not really for the flippers out there. So where do we find these deals? Where are they? Are they the short sales? Are they the foreclosures? Are there other avenues that I'm not even thinking about to purchase investment properties? And so I took a look this morning at the numbers. I went on the MLS and I took a look at everything that we have for sale. We've got a little over 6,000 listings available for sale. A little over 6,000 residential listings in our MLS system that are in Charleston, Dorchester, and Berkeley County. Take a guess at how many of those 6,000 are short sales, Bill.
I feel like we got to be below 10%.
Okay. Below 10%, so less than 600?
I'm going to go with less than 600.
Okay. There's 181 short sales. That's about 3%.
That's a lot less than I was thinking.
Absolutely. Yeah. What about foreclosures? What do you think the number is there? Sorry for putting you on the spot, by the way. I didn't give him a cheat sheet either. He's giving me real answers.
Well, now that I had the initial answer, I'm going to go with probably the same percentage, 3.
Yeah, it's about 2 to 3%, 164 foreclosures as of this morning. That's not a lot, folks.
It's very low.
It's 5 to 6% of our total inventory is short sales and foreclosures. Now, that's obviously assuming that the real estate agents categorize those properties correctly when they put it in the MLS, which, we've got some rules and ways of making sure that when people put properties in the MLS, they're doing it properly. But it's just not a lot of choice out there for distressed sales via short sales and foreclosures. So where are these investors that have clearly flooded the market finding all these deals? Well, one thing that I want to make abundantly clear to people is that you don't have to buy a short sale or a foreclosure to get a good deal. In fact, of the investment properties that I own, only one of them was a foreclosure. And the only reason I bought it was because it was in such poor shape that they were basically willing to give it to me for an extreme discount. I had to put a lot of work into that property to make it habitable. And that's where I think a lot of the deals are right now for short sales and foreclosures. If you buy a property that's in great condition and it's bank owned or it's a short sale, that bank is going to want pretty darn close to fair market value for it. They're not going to give you that huge discount we saw several years ago. And the reason for it is, there's just less choice. There are less distressed properties out there. There are less there are less inventory in general. So when the bank comes out and then they do their appraisal, or if it's a short sale, they do or foreclosure, they do something called a BPO, which is a broker price opinion, and the bank is going to want to sell it for very close to that number.
Well, the sign of this and the inventory being so down is that Fannie Mae just closed down the Home Path program.
Right.
So they had an entire inventory of foreclosures that they created an entire lending program to help offload these. Well, last week on the 6th, they shut down the Home Path program. It doesn't exist anymore. It's not needed.
Gotcha. So let's talk still about where to find these good deals. There are plenty of people out there that are in distressed situations. They might not be a short sale or a foreclosure. It might be that they have equity in the property, or it might be that they inherited a property and they want to sell it quickly because they want that money. I bought a fantastic property in downtown Charleston from a lady that inherited a property. She was in a bit of a financial situation and needed to sell quickly. I made her a very aggressive cash offer. She took it, and it was a win-win situation. And I think that depending upon your strategy, whether it be buying and flipping or buying and holding, and I can't say this enough, you have to align yourself with a real estate agent that has access to the deals, number one, and then number two, they have to understand the deals from all the other stuff out there. In other words, they have to be able to look at a property and say, yes, this is something you should buy. And for the people out there that are considering investing in real estate, if you don't have that experience, you've got to align yourself with a real estate agent that knows what they're doing. Because guess whose money's at stake? Your money, not the real estate agent's money. And if you align yourself with somebody that's just out there to get some deals done and make some commission and move on, that might not be the best strategy for a long-term approach to real estate investment properties. I've helped a lot of people this year get out of investment properties that they bought at the height of our market, and they have been waiting for years and years and years to sell. They can't wait to sell it. They just don't have the equity to sell it. Well, finally, now that prices are increasing and it's more of a seller's market, they have the ability to get out of the investment. And I hope that anybody that I work with that's an investor never looks at real estate investment properties that way, is how soon can I get out of this mess I've gotten myself into? That's like the worst if you're a real estate agent, because it means that you haven't done a good job and you haven't not necessarily steered your client in the right direction, but we have to be able to advise clients, especially those that look to us for investment strategy, on what is the good investment from the bad investment. I'll tell you a funny story. I had a meeting with somebody that has owned an investment property since 2004. And now that prices have increased, she wants to sell it. So I told her what I thought it was worth. It wasn't as much as she thought she could sell it for. Again, she used that good old handy-dandy tool Zillow to tell her what the property was worth. And of course, it was wrong. Surprise, surprise. Don't get me started. But we talked about the property. She said, well, I don't really have any interest in selling it at that price because this property earns me $300 a month after the mortgage payment. And so I tried to understand a little bit more about the numbers associated with this property, because $300 a month, I mean, you should keep it if you're making $300 a month on the property. But we got into the numbers, and as it turns out, it's taking her on average 2 months to re-rent the property, which she wasn't taking into account. Every time somebody moved out, she had to go back in and paint and do some repairs. She wasn't taking that into account. She wasn't taking into account any of the maintenance. And so anyways, the point here is that she said she was earning $300 a month, but in reality, she was actually losing money on her real estate investment. It's the only property that she owned. And that, I think, is the quintessential reason why you need to have a real estate agent prepare you for all facets of real estate investment before you get into it, because it's not just as simple as, hey, here's the projected rent, here's the mortgage and the taxes and the insurance, and as long as the rent is more than the taxes, insurance, and mortgage payment, then I'm making money. Although
with the new rule, it is that simple for qualifying now.
For qualifying, yes, but the numbers don't lie. You've got to take into account those extra things that
naive not to.
That absolutely affect the return on investment on the property. So getting back to where we find these deals, again, we're taking calls. Happy to discuss anything real estate related this hour. 843-556-1250. There's something I want you to understand. If you're trying to get into real estate investment properties. Back in 2008 to, I'd say sometime last year, a lot of what I did was short sale and foreclosure related. I helped a lot of people buy them. I helped a lot of people sell them. And for the buyers out there that are looking for these really good deals, typically they'll align themselves with a real estate agent that really doesn't understand that side of the market. And, as a real estate agent, when I list a short sale, and there's this incredible amount of work that goes into selling a short sale. It is not a short process. It has nothing to do with time, a short sale. So we're looking at, on average, 3 to sometimes 9 months to sell a short sale. It takes this huge chunk of your life to help someone get through this really bad situation, which, of course, you sign up for. You know that that's what's going to happen in order to sell the property. But you deal with this real estate agent that represents the buyer, that fills the buyer with misinformation, and that basically results in this disaster of a transaction. So I want to just go through a few things really quickly as it relates to buying a short sale versus buying a foreclosure, because one of the big things I'm all about on this program is setting right expectations and making sure that if you're listening to my program, you are then a informed consumer. So let's just look very quickly at the difference between foreclosures and short sales. And we're actually going to take a call really quickly from Matt in West Ashley about rental property. No? All right, John. We're going to move on then. All right, so let's talk about these differences. If you're buying a short sale or you're buying a foreclosure, there are a few things you need to know. Number one, 99 times out of 100, they are not going to make repairs. It is an as-is sale. Oh, here we go. All right, Matt's on the line. Matt, how can we help you this morning?
Good morning. I love your show.
Thanks,
I didn't
man.
realize you had a Q told me that you've got you replay at 10, so this question might be mute because I turned it on a little late. But you were talking, who is your guest on today?
Bill Sandvig of Movement Mortgage.
Okay. He said, and let me make sure I heard this right, if you own rental property, it does not go against you as far as credit.
So
Credit card, if you put $10,000 on a credit card and it's maxed out, that's going to hurt your average, right?
right. So
Your credit score. But if I have a rental house, which I do, that's not going to hurt me as far as my credit score goes?
So it's not according to your credit score. A credit score is going to be based on your total liabilities. What we're talking about is the ability to qualify for a mortgage. So debt to income ratio, I'm sure you've been through the process a few times, is a big factor in qualifying for a mortgage. Well,
Right.
in the past, the rental properties would really hurt and make it hard for people to qualify for a mortgage because of the impact it had on their debt to income ratio. Now, under new rules, regardless if you have a history of being a renter or a landlord, as long as your ratios are in line and you're making money on the property or the rent is over the liability of that property, it will
Right.
not count against your debt to income ratio, even if it's a new property. So that means you could go out and actually lower your debt to income ratio and it wouldn't hurt your ability to qualify. The requirements for qualifying for that rental or the investment property purchase are still the same. You have to put 20% down. You have to have a high enough credit score to qualify for an investment property. But that impact on your debt to income ratio has basically, when you make a smart investment, gone away. Does that answer your question?
Yeah. So, of course, you don't want to buy rental property that's you're going to be in the hole. You want return on your investment, unless you think the house is going to just go up sky high. But
Right.
okay, well, I'll listen to I had another question about the $100,000 thing that you were talking about, but I'll listen to the show tomorrow at 10.
Well, lay it on us.
Yeah, go ahead and tell us.
Well, you were talking about buying one house straight up for $100,000,
Right.
and I don't even know if there's a $100,000 house out there.
They're out there.
Are they out there? Instead of paying one straight up cash, taking it divided by 4 and putting $25,000 down on each one of them,
Correct.
as long as they're going to do return on investment. And you, as a banker, what do you look for? Do you look at that return on investment, how much they're making on the unit?
Yes. So what it's based on is when you get the appraisal done, the appraiser is going to do a projected rent calculation for that property. So even if you don't have a renter in that potential investment, if that projected rent on the appraisal reflects a higher number than the liability from that property, then you could repeat that pattern over and over and actually improve your debt to income ratios for qualifying. So that's what we were talking about is, well, why to pay cash for one? As long as you're making smart investments, you could divide that money and conquer and have increasing equity and a return on investment for each property with this new rule.
Okay. All right. Well, thanks. I appreciate it.
Thanks for the call, Matt.
So, guys, I really look forward to 8 o'clock, but now I've got 10 o'clock now.
Well, it's 10 o'clock Sunday, not Saturday.
Right. It's 8 o'clock on Saturday, 10 on Sunday.
Yes,
You got
sir.
it.
I don't sleep in, but sometimes I miss the beginning.
All right. Thank you very much.
Thanks, Matt. All right, we're going to take a quick break. We'd love to take some more calls. The number again here in the studio, 843-556-1250. This is the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA.
Have a real estate question? Ask Brian Beatty. Send him an email, lowcountryhomesales@gmail.com. The Brian Beatty Real Estate Show is on 1250 WTMA.
WTMA.
You're listening to the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA and WTMA.com.
Welcome back to the Brian Beatty Real Estate Show, and thanks again for joining me this morning. I know it's a little early on a Saturday or Sunday, but we are taking your calls this morning. The number here in the studio, 843-556-1250. We're going to go straight to another call with Gloria from James Island. How can we help you this morning?
Good morning. I have two quick questions.
Okay.
I'm in the process of getting my home ready to put on the market. My home has been paid for.
Okay.
I did go and get an equity access loan about a year ago, and I owe about $16,000 on that equity access loan. Mm-hmm. My first question is, how will that affect me when I go to actually put my home on the market, first of all?
Well, I don't think it's going to have any effect on you selling the property. It's going to have an effect on you purchasing your next home, though, and I'm going to let Bill talk to you about that.
Okay,
would the plan be to sell this house prior to acquiring the next one?
Yeah, what I'm planning on doing is selling this house and relocating out of town, and I'm planning on purchasing another home in another town. So,
sure.
That's the next question is, what is the, because I would immediately, once I sold this home, I would pay off this loan, obviously, totally. So I would not owe any, owe any money. So that would help my FICO score there. And what is the score you need? I've had this home for 32 years, so I've had no reason to even check into what's the requirement, for purchasing the home under the FICO scores.
Gotcha. I understand your question. So the impact of having your equity line, the only impact that's going to have on you, as long as you've been making those payments on time, it's actually going to help going to help your credit score to have a mortgage liability that you've been making regular payments on. So that's actually a good thing.
Actually, I pay I pay $500 a month, which is like
over the amount that you actually have to pay. So
about 100% over the amount. Yes.
Sure. Yes. So what the only impact is that when you sell the house, you're going to net less proceeds from the sale because of that liability being attached to the house. And to answer your other question, the minimum qualifying score for making a primary residence purchase is actually 580, which is very, 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 very low. And if you're going to be putting a significant money down with transferring your equity, then you're probably going to be in a conventional loan, and anything above 640, and you're going to be in good shape. So I think you're going to be in good shape. I wouldn't stress too much, and good luck on your move.
Is the 780s right now?
Yeah, well, you're in great shape.
You're golden.
Great shape.
Okay. Thank you so much. I appreciate your help. Okay?
Thank you.
Thanks, Gloria.
Okay. Goodbye.
All right, again, we're taking some more calls this morning. We've got about 15 minutes left in the program. The number here, 843-556-1250. Let me finish my thought here on the difference between buying a short sale and a foreclosure, since we've been talking about investment properties this morning. And then when we take a break and come back, I'm going to talk about selling short sales. I'm going to talk about that process and help just have you understand everything that goes into that process and why they take so darn long. But again, let's talk about the difference between buying a short sale and buying a foreclosure. Obviously, when you buy a short sale, it's still owned by that individual homeowner. So a short sale is not owned by the bank. That's the foreclosure. The foreclosure is owned by the bank. But in a short sale, we are asking the lender to agree to a smaller amount or a less amount than the mortgage. So if you owe $250,000 and your house is only worth $200,000, simple math, you have to ask that bank to agree to $50,000 less at closing. That is the negotiation. With a short sale, it takes much longer than a foreclosure, typically. Foreclosures can be purchased in 30 to 60 days. Short sales can take as long as a year. The longest short sale I had was 15 months, and that was a very complicated process. A lot went into that deal, and that's a particular deal that I'm proud of, in that man, that guy had some serious financial issues that he needed to sort through, and we were able to get him through it. And
let me guess, multiple mortgages to get permission.
Multiple mortgages, and not just mortgages that exceeded the value of the house, but there were some additional liens associated with the sale of the property that we needed to get through as well. And sometimes buyers don't think about that. They don't think about, we're not just dealing with negotiating on a mortgage. We might also have credit card debt. We might also have an HOA lien that we have to deal with.
Unpaid taxes.
Unpaid. There's a ton that goes into these deals. And again, working with a real estate agent that understands this process and knows all the right questions to ask before we tie you up into property is vital. Another thing with regard to foreclosures and short sales is the inspection process. With short sales, you have the leniency of either doing your home inspection before or after the short sale is approved. It's just going to depend on the listing agent and what they're going to tolerate. But with the foreclosure, you have basically, it's either 7 business days or 10 consecutive days, depends on the bank, to get your inspections done. And if you don't get it done in that amount of time, then guess what? You waive your right to have that inspection done, and you are purchasing that property as is. And by the way, they're not going to make repairs. It's just for your own peace of mind.
That's exactly what I was about to bring up. A key difference in foreclosure is if that property isn't up to snuff and going to pass an appraisal, the bank is going to dig their heels in and say, no, you can't touch this property. And guess what? We're not going to do anything about it either.
Right. One more quick thing, by the way, when you purchase a short sale or a foreclosure, there are resale restrictions on the property. And it basically states that you can't sell the property in 30 days or less, or you can't sell the property in 90 days as long as it's for greater than 100 well, let me read that again because I've actually got a short sale approval letter right here. It says the buyer agrees that the property will not be sold within 30 days of the closing and will not be sold within 31 to 90 days of the closing for a gross sales price greater than 120% of the sales price of the transaction. So in other words, if you're flipping a property and you buy a short sale, you can't turn it right around and make a massive profit in the first 90 days. You've got to wait at least 3 months before you sell it.
What's the reason on the backside of that? I guess what's the root cause there? I don't know the implication.
It's an attorney question. I'm not going to answer that one. I know the answer, but I'm not going to shoot myself in the foot on that one. And I tell you what, we're actually going to take a quick break, and when we come back, we're going to talk about the short sale process, but on the seller side. If you have questions, call us here in the studio, 843-556-1250, 843-556-1250. This is the Brian Beatty Real Estate Show. Again, visit me online, listingsincharleston.com. We'll be right back.
Find Brian Beatty online at listingsincharleston.com. The Brian Beatty Real Estate Show continues next on the Big Talker, 1250 WTMA. WTMA. Now, the Brian Beatty Real Estate Show continues on Charleston's Big Talker, 1250 WTMA.
Welcome back to the Brian Beatty Real Estate Show. Thanks again for tuning in this morning. We always appreciate you taking the time to learn a little bit more about our real estate market here in Charleston. If we can help you with anything real estate related, please give us a call here in the studio. 843-556-1250 is the number here. 843-556-1250. And if you have something real estate related you'd like to discuss with me personally, probably the best way to contact me is just to go to my website, listingsincharleston.com. You can send me a message directly on that site. Considering buying investment property, which is what we've been talking about this morning, or if you're thinking about selling a house, click on the Sell Your Home tab. Learn more about my 59-day home sale guarantee at 4.5% commission. Basically, I'll sell your home in less than 2 months, or I'll sell it for half my commission. Again, the website for that, listingsincharleston.com. You know, Bill, one thing that I was thinking about we didn't get to at the very beginning of the program, which people always appreciate when you have on, is what's going on with interest rates.
So interesting week in the market, as I'm sure many of you are aware. Biggest 1 week decline in over 2 years in the Dow Jones. And that led to the 10-year Treasury falling as well. And for a brief moment, the 10-year fell to a 16-month low. So we actually had a really good week in interest rates. Interest rates fell the equivalent of about 0.25% in interest rates. So
nice.
So we're down below the 4s for FHA and government loans, and 4 to 4.125 on a conventional loan. thanks again for having me on the show. I always love coming on the show and talking with you. And if anybody out there has any more questions, you can find me through Brian. He'll get you in touch with me, or you can go directly to my website at lowcountrylending.com.
Very good. Thanks a lot, Bill. I wanted to finish out our program by talking about the short sale process for sellers. It's something that I've helped a lot of people do. And it's never a fun meeting. I'll put it that way. Whenever you sit down and you talk with a homeowner about their situation financially and getting them out of their house, which for many people is a very happy place, but they owe more than their house is worth, and it has become a financial burden to them. Or let's say that they've lost their job, or they've had some sort of illness that's racked up medical bills, and they just don't have the ability to make payments anymore. What do? Well, we have to do a short sale. We have to ask the bank to agree to sell your house for less than the amount that you owe, because we can only sell it for as much as the market's going to pay for it. So let me just quickly tell you a little bit about the process with short sales. When you meet with the real estate agent, first and foremost, and I can't stress this enough, it is incredibly important that the real estate agent you choose to help you with a short sale on the listing side is somebody that has been through the process before in helping a seller. See, in my mind, you can't fully understand the process of helping somebody buy or sell a short sale until you've represented both a buyer and a seller. And frankly, you should have done it multiple times, because it's a very serious situation. We're dealing with somebody's home, and we are negotiating with the bank to agree to have them be released from this potentially very large amount of money that they technically still owe. So we negotiate for that bank to let the homeowner walk away and not owe anything else to the bank. And we've been very, very successful in creating opportunities for people to basically just walk away from their house, regardless of how much they owe. There's a lot of guidelines there. There's a lot of caveats that I could say, but let me just tell you a little bit about the process. So you meet with the real estate agent, you talk about what your house is worth, you determine that you have to sell your house and it's going to be sold for less than the amount that you owe on your mortgage. Well, first of all, you have your real estate agent have a discussion with you about the process, but then you also should speak with an attorney, and you should also speak with your accountant. As a real estate agent, I have a team of people that I employ to make sure that, well, not necessarily employ, but work with, to make sure that this process is a smooth process for you and that you have all your questions answered. Again, it goes back to setting the right expectations with regard to real estate. And short sales, you couldn't have it stressed enough that you've got to have the right expectations going in. So let's say that we agree to sell the property, we put it on the market, we gather a bunch of documentation from you, like the listing agreement, the short sale application. Of course, we need a fully executed contract. We need an estimated settlement statement. And from the homeowner, we need a financial worksheet that details your budget. We need a hardship letter that explains to the bank why you are asking them to basically forgive the debt. Think of it as a reverse resume, is what I like to say. Think about it as a way to not lie, but don't be afraid to have it look as bad as it can possibly look, because banks look at those hardship letters to say, all right, what is this person's situation? Why should we consider this home for a short sale? Then you need the letter of authorization, which allows either me, the listing agent, or the attorney to negotiate that short sale. We need 2 years of tax returns. We need 2 months of bank statements. We need your income statement. Basically, this bank needs to take a full look at your financial life to determine whether or not you are collectible. In other words, do you have the ability to repay the bank the difference between what is owed and what you inevitably are going to sell the property for? If you've got hundreds of thousands of dollars in the bank, they're sorry, but a short sale is probably not going to work for you. You have to be in some sort of distressed situation. So we go through the process of negotiating the short sale, which, I've got a Wells Fargo short sale process checklist that I've gone ahead and printed off, and I have them for just about every big bank out there because I've done so many of these short sales. And if you want to see what this checklist look like, if you want to see this timeline, basically, again, it varies from bank to bank, but feel free to go to my website, listingsincharleston.com, and it will show you what happens during the setup phase, the processing phase, the negotiations phase, the closing phase, the settlement phase. There's obviously a lot that goes into these deals. And if you're in a situation right now where you need some help, you need to sell your property, you're in some sort of distressed situation, contact me personally. Let's have a private conversation about it. 843-345-1273 is my cell phone number, or go to my website, listingsincharleston.com. Bill, thanks a lot for joining me this morning, and thank you very much for listening. This is the Brian Beatty Real Estate Show on the Big Talker 1250 WTMA.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning from 8 till 9. Contact Brian Beatty online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. 843-345-1273.